What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we are covering potential repercussions of Trump's tariffs. As we know, President-elect Donald Trump is going to be taking office in January of next year, and one of his major focuses for the economy has been to increase tariffs on China and other countries that are importing into the U.S. Now, this article right here is talking about how Walmart and Lowe's are raising the alarm on these tariffs and what it means for consumers like myself, like you, everybody that's going to be involved here. So if you're excited for today's video or just curious to know what it is we're going to be talking about here, feel free to like the video, subscribe to the channel if you've not already done so, and turn on the bell notifications for all future uploads. Now, before we do get into this, believe it or not, on the Fridge Financials channel, we did in fact cover how a Trump election could increase inflation, and people had their opinions, their thoughts, and their ideas, which is totally fine, of course. And again, I don't like to get too political here, but I like to focus on this from an economic standpoint as to what it means for us for the next couple of years with Trump being in office starting in January. So Walmart and Lowe's stocks diverged after the latest earnings report, but there was one shared message. There's trouble ahead for President-elect Donald Trump's proposed tariffs. Walmart had the starker message even as its shares gained on an improved outlook. Its CFO, John David Rainey, said consumers probably will face higher prices if Trump goes ahead with proposals for a 60% tax on goods from China and 10 to 20% levies on all other imports. Basically, what he's talking about is that Trump is looking to put these taxes on goods and things being shipped in from China and other companies. This tax means that it's going to cost China, if it's coming from China, an extra 60% to have it sent into the U.S. and other countries 10 to 20% on things being imported into our economy, and that is not good. And we're talking about having higher prices here, and as you could have guessed, inflation, we're just starting to come back down. We've had 2 rate cuts now at the time of me recording this, a 50 basis point cut and then a 25, and it looks like we're starting to have a turnaround. It seems like lower interest rates means lower mortgage rates, and hopefully as we go through the future and getting back to that sense of normalcy after having such high inflation for so many years now, I feel like. Lowe's words were more circumspect, with the home improvement retailers executives noting tariffs would lift costs, but also saying they were waiting to see what happens when the new administration takes office in January. Now, of course, we have no idea what's going to happen until Trump does, in fact, take office in January with his cabinet, with his leaders alongside of him, and what's going to happen. We don't really quite know. This is all speculation, but it is worthy to note as this is a possibility. Together, the two reports are a reminder that the U.S. consumer still hasn't recovered from high inflation and the impact of higher interest rates used to wrestle it back down. Walmart said shoppers are resilient but are still spending more on food than they have historically. Okay, I mean, because food is a necessity, obviously, as we need to survive. Lowe's said homeowners are still waiting for lower interest rates to embark on big home improvement projects. Usually because those big home improvement projects cost quite a bit of money, thousands of dollars, and that means you're probably getting a loan out for it. And in order to have a loan, obviously you need interest rates that go with it. So people don't want to take out these high loans with these high interest rates. They're waiting for loans to come back down, or for interest rates to come back down in order to open up a loan to pay lower on the interest as we go. Makes sense. The chances that Trump will follow through on tariff threats in his second term look to be higher after the president-elect said he would nominate Howard Lutnick, a vocal fan of the levies, to lead the Commerce Department. UBS economists estimate that a 20% tariff on a finished consumer good would translate to an average price increase of 8%. Oh boy. Just when we think that hopefully prices start to go back down, again, a 20% tariff on imports would translate to an average price increase of 8%. Now, the key word there, as we know, is average, because that means some prices are going to be higher than 8%. Some prices are going to increase by less than 8%, but on average, 8% increase of prices. On balance, Trump's election win is still boosting markets, which is absolutely true because the market has been crazy since the election and crypto has been off the chains. And the crucial holiday season should provide some further cheer. However, fanning inflation with tariffs could sour the mood for consumers and the stock market. So this is focusing on, we made a video about it. It was covered here, how inflation could increase if Donald Trump becomes president. And it talks about his potential tariffs that he wants to involve in as an elect to help cut the deficit of the U.S. But again, at what cost? And what people are starting to think about is saying, okay, well, again, if there's tariffs, if there's taxes on goods being imported into the U.S., that means that the producers are going to be pushing that cost to the consumers. Because if they raise the tax 20%, if your goods to get imported cost an extra 20%, they're going to push that onto the retail consumers to make up the difference because they're losing money otherwise. So the article goes into more about their earnings from Walmart and everything else, which is great. This is an article about Bitcoin nobody cares about as much. But this article, where is it? Not this one. This is a different one. But we'll talk about this one anyways. Why not? Again, Walmart talking about it. There's a bunch of articles that cover this idea of how tariffs are basically working. Again, Trump has vowed to impose sweeping tariffs in his next administration, sending companies scrambling to shift production out of China, stock up on inventory, and weigh price increases. So either ramp up the production and put it somewhere, figure out a way to make your production happen outside of China, because China's getting the biggest hit of 60%, which is crazy, and trying to figure out what they can do. Because the election was in November, earlier this month, and now you have till January to figure out what you're going to do. As companies brace for an increase in the cost of importing produced products, shoppers can expect to see a reflection at their favorite stores. Consumers could lose $46 billion to $78 billion in spending power each year if the new tariffs are implemented. Losing spending power basically means you're paying more and your dollar doesn't go as far. So $1 that goes as far today won't go as far the next year, again, because it devalues. Again, inflation. It's the idea that's how it works. If the tariffs are going to affect the levels that have been spoken about, retailers will have no choice but to put up prices. Inflation, in a nutshell. So one of the things that they will have to do is to pass some of those cost increases over to consumers in the form of higher prices, adding that it will be a move of last resort for a lot of retailers. So again, hopefully the retailers are going to be sitting there thinking, you know what, let's try to figure out other ways to make this money back up. Worst case scenario, though, it goes to the consumers. I don't know if they're going to see it as a worst case scenario or more of a first case scenario, but only time will tell, of course, as we know. So in his first term, President Trump instituted tariffs against China that created jobs, spurring investment, and resulted in no inflation, and that Trump would work quickly to create jobs and lower taxes. Here's a look at retailers that have said they'd likely hike prices if such tariffs are instated. Walmart spokesman Molly Blakeman told Axios Tuesday that the company is concerned about significantly increased tariffs because they could lead to increased costs for customers. Of that, raising prices certainly wouldn't add product costs, but added timing and details are uncertain. For Lowe's, AutoZone guy is funny, man. AutoZone dude is funny. CEO Philip Daniel said on the earnings call, if we get tariffs, we will pass those costs back to the consumer. Awesome. Hey, short, sweet, to the point. You give us tariffs, we are going to push it to the consumer. At least he's open and honest with it and upfront. I've been like, well, who knows what's going to happen? You know, Columbia spoke about it. Stanley Black & Decker spoke about it. Steve Madden was talking about how we can move that out of China entirely. All these different companies are coming out with it. And now here's what the craziest thing is, which again, this is from Reuters here, this article. And there was something that was very, very important about this. Where was it here that I thought was very interesting? This again, Walmart talking about it. This right here. Since the beginning of September, so even before Trump was elected, executives from nearly 200 companies in the S&P 1500 Composite Index discussed tariffs on earnings calls or at investor conferences, nearly double the same period in the run-up to the 2020 election, and far more than the 23 mentions in 2023, according to LSEG data. So since the beginning of September, companies were already starting to be like, guys, these tariffs might have an impact on our production, on what we're going to be selling to the consumers. Like, it was already being discussed. But not only was it being discussed, 200 companies, nearly doubling the same from the 2020 election. Because, again, Trump, when he was first in office in 2016, imposed these tariffs. But now these are tariffs, but a lot higher. So, again, even higher tariffs, even higher taxes imposed on these companies importing to the U.S. turns into having consumers basically having to pay for the difference because, again, companies got to make money, right? Roughly 40% of our costs of goods sold are sourced outside the U.S., and that includes both direct imports and national brands through our vending partners, says Lowe's. Trump's fully idea is 60% on tariffs, and universal 10% or more, which he says is necessary to eliminate the U.S. trade deficit. So that's what his logic and reasoning is. Oxford Economics estimated a 60% China tariff could boost U.S. inflation by 0.7 percentage points, and across the board tariffs would boost inflation by 3/10 of a point, or 0.3 points. Oxford believes any tariffs to be gradually introduced, but some analysts are worried about the shock effect. So look at that combined about 1% increase on inflation. And again, inflation values are starting to come back down with the CPI data, the PPI data, all those different data values that measure inflation. So these tariffs are going to be increasing it back up. What does that mean? Obviously, we don't know. Again, a shock effect could be a possibility here. Maybe, the Fed sees that and freaks out. Maybe the market sees a huge uptick in inflation and freaks out and the market sells off. That's like the shock of being like, oh my God, inflation's up over 1% with these tariffs. So we're not really quite sure. But they're worried about that as a possibility. Again, this is all speculation, of course. Nothing's finalized. Trump 47 won't be a mere replay of Trump 45. Knowing that the president-elect's proposals now were far more expansive. And here's a chart breakdown of the imports from China by value as percentage. So 30% of the imports from China by value come from computers and electronic products. Electrical equipment and components, 12.1%, other 15.6%. So it's broken down into a lot here. But the thing is that computers and electronic products being 30%, again, that's going to take a huge hit on all the big tech, the big expansions of tech across the board. Who knows what's going to happen, right, with these prices. Possible sector effects are there, of course. And the change in the CPI data, Consumer Price Index, by 2028. 1.8% with retaliation, or without retaliation from other countries, 0.8%. So that's just the idea here. So again, it's interesting to note that, in the Fridge Financials channel, we did talk about this 3 months ago. So looking at, I think that was August now at this point. So looking at August, we talked about how Trump election could increase inflation. Now it's starting to come more of a picture overall. These articles are coming out and saying, hey, guys, we got to be careful of this. We got to think about how can we either get out of China and make our production somewhere else, or are we going to have to put the cost back on the consumers? Which, again, people are worried about inflation and everything else, and this might come back again. So just something to think about, something to be aware of as you see Trump go into office in the next 2 months, as things what's going to happen. So just something to be on the lookout for. Thank you so much for watching today's video. If you made this fun, the video, make sure that you feel free to like the video, subscribe to the channel, turn on the bell notifications for all future uploads as per usual. I hope you guys are making money in the market. Make sure to check out Fridge Financials channel, and I will see you guys as per usual in the next video.